If you learn this concept, I promise you that your investing journey would never be same. This is where every investor want to be. The stock was up 1495%. I mean, look at this. Your money grew 15x. And what happened to your 15x? Is this is the stock everyone wishes to have in their portfolio. Look at here. 1200%. That means your money got multiplied by 13 times. This is one of the biggest wealth creators, especially in large cap space. Again, 1341%. That's 14 times your money, right? Very fancy story. This is the stock you want to avoid ideally. I mean, you lost 40%. The entire market has doubled in the last 5 years, but you lost 40% in this stock. Hello, investors. Welcome to Chart Shastra, where investing is made simple with the help of charts. Today, it's a very special video because I'm going to do something which no one has ever done it on YouTube. This video is specially made for long-term investors out there. Long-term investors study the business extensively and they take their positions without considering price and volume. I'm going to cover those mistakes today. In fact, I would be doing a deep dive price action analysis of India's largest 100 companies over the last 5 years. We will be seeing what are the winners, losers, and how the smart money has moved from one sector to another sector. I would also teach you one of the most important concepts in technical analysis every fund manager and professional money manager would use. It is called stage analysis. So, are you excited, guys? I am very excited. Make sure that you watch this video till the end. Let's discuss about stage analysis. This was introduced by Stan Weinstein in his book Secrets for Profiting in Bull and Bear Markets. This book was launched in 1988. Trust me, guys, these concepts are still relevant in current times, and most of the professional money managers use this concept. He says that every stock has these 4 stages: stage 1, stage 2, stage 3, stage 4. Stage 1, which is consolidation stage. As you can see in this stage, there is actually no price movement. It is flat. The buying and selling pressure is equal. The buyers and sellers are in the equilibrium. Investing here can tie up your capital for long period without much gain because the trends haven't been developed right. Next, the stock enters into the stage 2. This is where every investor wants to be because there is a strong price uptrend with a very strong rising volumes and confirming institutional buying. This is the ideal stage and has the highest potential gains. Coming to the stage 3, which is called the top or distribution phase. Here in this phase, institutions offload the shares to retailers like us, causing the stock to trade in a range with declining momentum. These key signs include lower highs, failed breakouts, increasing volume on breakdowns. We would see with these examples explaining how a top would be formed. Traders should avoid longs, in fact, look for shorting opportunities, prepare for the transition to stage 4. This is the last stage. The price declines very sharply with increasing volume, often fueled by negative sentiment in the market about the stock. This can lead to significant capital losses. You have to stay away from stage 4 stocks. Let's study stage analysis with a case study. We would be discussing about the most popular name, the Tata Elxsi. Almost every retail investor has held this stock at one point or another time. As you can see, the stock did not made any return from 2019. In fact, much before 2019 to almost late 2020. This is called the stage 1 consolidation. All the investors who were investing in this stock at this time made no money. They were sitting on a dead stock. But as you can see, the stock broke out and its long-term moving average, which is 200-day moving average, started to slope up. This is where the stock has entered the stage 2. And the stock quickly moved from 1000 rupees to 10,000 rupees. This is where all the smart money and institutional buying happens with huge volumes. And once all the fundamentals were too good and the stock is making a euphoria in the market, this is where the smart money exists, usually signaled by a top. And all the retailers get trapped here because we have been seeing a stories that the stock has moved already 10x from here. So we start buying it and the stock quickly falls. Here in this case, it has corrected more than 50%. Now we hold the stocks hoping that it would make another 10x move. But it usually doesn't happen. We as a retail investors always want to exit the stocks before this stage 4 transition occurs. So guys, now let's come to the main section of the today's video, which is Nifty 100 price action analysis over the last 5 years. So this is the trading view terminal. I'm going to take you just a brief introduction of what are the elements here. Here I am putting the time frame as weekly. So here each candle represents 1 week of price. And currently I am setting this to 5 years. It means that we are starting from the date November last 2019 to almost we are in the November last week, right? Same November 25th, 2024. So this is the complete price action of Reliance, and the right side you can see this is the price. Here the green color line you see that this is a 200-day moving average, which is the long-term moving averages. So usually the long-term investors use this kind of moving average. As we have seen in the stage analysis, right? A stock is in stage 2 uptrend if the moving average, which is the long-term moving average, is rising and sloping upwards. So let's start with our analysis. Here this is Reliance. As you can see, this is a bit choppy chart. I mean, initially after the 2020, there was a good rally because of the Facebook Geo merger. It happened 50% within 120 days. Then the stock has consolidated. Then again, it has moved from this level to it has moved to 1200. This is post split. Earlier, it used to be 1500, 3000 level. Currently, the Reliance is not doing much. It came out of this base. It looked like again here you can see, right, it looked like it was having a breakout, but suddenly there was this huge correction. This could be called something as a false breakout. I mean, a breakout has happened, but again quickly the price came back. As of now, you can see that Reliance is below its 200-day moving average. TCS, you can see that after the 2020 COVID, there was a huge rally, but after the 2021 October highs where the market made its top, since then there has been nothing much interesting happening on the TCS. But here you can see, right, lately this is coming out of this long base consolidation, which is probably a stage 1 kind of thing. You would see in today's video that most of the IT stocks look something like this. They are coming out of their long bases. That's why I repeatedly said that IT stocks are going to do well in the coming days. HDFC Bank, again, you see, right, it hasn't made any money for long-term investors almost since February 21. That's like 4 years. But recently, you can see that the stock is trying to break this 1800 range. Even in this week, the stock has tried, but it got rejected again. Ignore this large volume. This is due to MSCI rebalancing happened in this week. See, look at this. This is what I call the stage 2 uptrend. There would be long consolidation, then the stock breakouts, the moving average starts sloping up. This is what you want to own something in your portfolio. This is the perfect stage 2 example I'm talking about. As of now, there is nothing worry about. Even despite the market correction, you see that the retail has rebounded back again. It hasn't touched its 200-day moving average, although it has been slowing up. But again, it is a healthy stock in this current market situation. Look at the ICICI Bank too. Now again, I am showing you the HDFC Bank. Look at the stark difference between the ICICI Bank and the HDFC Bank, right? During the same time, HDFC Bank literally made zero money, whereas if you look at ICICI Bank, it had made from the same time it had made 160% greater than the HDFC Bank. This is what people call it relative strength. You always need to have the stocks which are relatively stronger among the group. If you are owning a bank stock, try to pick the leader. Here I mean not the market leader or market share leader, the price leader. Next, look at Infosys. See here, there was a huge rally after COVID. This was a perfect stage to uptrend. As we have discussed, this was the top and this was your sharp decline in price. This was your stage 4. Again, the stock has formed a base, looking like probably in coming days, if the sentiment turns out to be very good, you can see a breakout and Infosys would start moving up. That would be the beginning of another stage to uptrend. SBI too. Again, compare it with HDFC Bank. HDFC was not doing nothing, whereas State Bank of India has done well. Although it has been much slower relatively to ICICI Bank, but if you see the consistent trend, the moving average is sloping up, taking some rest, sloping up, again taking some rest. As of now, you can just draw this trend line. If it breaks above this level, you can expect another move, something like this. ITC, people trolled a lot about this stock during the COVID period that it hasn't moved anything. Then it started having a spectacular move right away from 240 to 500, almost 100% move. Then again, you see that lately it has been doing nothing. The moving average too has become sideways. Till this recent high is taken out, let's not completely focus our attention here. Another example, see, this is what I call a dead stock. Just like HDFC, you just put your money here, but it did not do anything. Although the story would be very good, the management would be exceptional, the fundamentals would look awesome, but price is what we need, right? Price is always driven by the expectations. If the smart money are not buying the stock won't move despite how good the story is. Look at LIC too. This is fairly relatively recently listed stock. It doesn't have 5-year track record. As of now, it is still chopping unless and until these levels are taken out. We can discuss it further. Look at this HCL Tech. Despite the TCS or Infosys, you have seen that they are still struggling to make a new high. But this stock has already made its new high long back. And again, there was a middle here. This was the consolidation. Right now, you can see here, right? Again, the moving average is sloping upwards. This is what I call the leader, price leader in the segment. L&T, it had a wonderful stage to uptrend. Right now, it is just consolidating. You just can't call it top because we don't know what is going to happen next. If it falls down, then we can confirm it that this was the distribution. But if it starts moving up, this could be the accumulation. This could be the stage 1 again and moving to the next stage 2. Sun Pharmacy, again, very strong chart, very strong chart. Although there has been some occasional hiccups in the stock, but again, it quickly bounces back at these levels and started moving up. Again, it is starting to get closer to this. Probably it might take support and start moving up. If it goes down, that would be a big red warning for you. It means that something is changing inside the company. Look at it, Bajaj Finance again. No matter how good the story is, how good the management is, price tells you everything. This stock has done nothing unless and until it breaks above this 8,000 level. I'm not even looking or considering Bajaj Finance. NTPC, a beautiful example now. A long consolidation base. You have seen a strong uptrend. Now the stock has tried to take a support here, but again got rejected down here. Probably you might this might looks like a top and there would be a stage 4 downtrend in coming days. Keep watching it. If you are holding NTPC, I would say stay on the alert. Axis Bank, not so great, but relatively better than HDFC, right? You understand the story. HDFC, ICICI, SBI, and Axis, and we will see the Kotak. That would be a very interesting example. Look at Maruti, not so great uptrend, but again here you see that there has been the background. This was this 12,000 level was the crucial support, but it was broken down and it came below its long-term moving average. Now it is seeing some kind of selling. Look at it, Kotak, just like HDFC. Look at the ICICI chart, compare this with it, right? this stock too has not made anything. I respect to the Kotak, I respect Kotak Mahindra Bank, what it has done. But again, if we are investing in the market, we want our money to grow, right? We don't want our money to sit idle. M&M, look at this one. This is a wonderful example. One of the strongest name in the auto space. Look at Maruti, it has broke down below the long-term moving average and is heading downtrend. But this one, there was, although there is some kind of volatility here, but it is not heading down. It has respected this 2600 level. Look at here. Multiple times it has taken support and got bounced back. ONGC, same like NTPC, probably an NTPC in future. If you see the NTPC in a future sense, this might be looking something like that. You can see that it has broken down. Although there was a very good rally, but now it is not in a very good shape. Tata Motors, similar, just like M&M, but the only reason is the huge selling. This is where people should have exited ideally 930. The crucial support has been taken down. You never know how long the stock would take again to reach back to this level. So just having a hope that this stock would come up is not going to help you. Ultratech Cement, good one. You can just draw another line here. This was the consolidation. It broke out. It started. Although fairly, it is taking its own time. Not very strong, but it is going at its own pace. As of now, nothing to worry about. It got again bounced back at this crucial support. Adani again, the stock was up 1495%. I mean, look at this. Your money grew 15x, and what happened to your 15x? It was down half. It means that now your money won't be as good as like it used to be here, right? That's why this is what I would say the top of stage 3 and the sharp decline. You should always exit somewhere here. Worst case, the best case is to exit somewhere here. The worst case is to exit somewhere here, because since then the stock did not even move up. Power grid, very good example. See, recently it has taken support at its level and now trying to get back. Probably if this level is breaking out again, you could expect some move, but this is ideally where you want to be in every stock, the beginning of stage 2, and you get to ride the trend. I'm not saying that you can catch the exact bottom and you can sell at the exact top. All you have to do is, if you can catch a meaningful move between here to here, that would be decent enough, right? Titan, it was a very good growth story. Again, it is having its own hiccups, although it was a good rally here. Again, it took some its time, then had a good rally here. Probably now it is again taking rest. We don't know how long this will continue. Again, it comes to its previous high and breaks out somewhere here like this. We would be interested. Bajaj Auto, fantastic example. See, this is what the stage 1 consolidation, perfect breakout here. Then a huge rally, stage 2. Then you see, right? Huge selling with large volumes. It did not even give you the chance. And even the moving average is so low that you have lost almost more than one third of your gains by this time. Ideally, you could have exited, or some exit, half of the portfolio or half of the position could have been exited here, and the other half could be. Now again, see, even the other stocks are trying to get back, but this one is seeing massive selling, massive selling. Adani Ports, same stage 1 consolidation, breakout, stage 2, but again you got your exit here. See, you are identifying the patterns, right? Whenever the stock comes below this moving long-term moving average, it becomes very hard for them to move. Same story, Coal India, NTPC, right? Stage 1 consolidation, breakout, fantastic move. Now again below it. Asian Paints. See, this is what I'm telling each day. Why I won't invest in Asian Paints, or why I won't even touch it. You don't want such stocks, right? No matter, it has 100 years of history. It is the market leader in the paint industry. Many popular fund managers would start coming saying many stories, but price is the king. Price is the ultimate king. The tape tells you everything, as Jesse Livermore said. Wipro, look at it. It is trying to get back its level, Once it breaks out, probably you would be left with this 20% odd move. Once it breaks out again, you would see the this last 2-3 months of moving average. Is it sloping up, or is it flat, or is it heading down? That's what you have to focus in your stocks. Hindustan Aeronautical Limited, I guess this is the stock everyone wishes to have in their portfolio. Look at here, 1200%. That means your money got multiplied by 13 times. See, that's the magic of compounding. I mean, here you could have this would be the breakout somewhere here. You see here, right? Because of the volumes, huge volumes here, the price is not reflecting here. But if I can just draw the line, this would be the breakout. And again, you could have got another base here, another base here. It gave you multiple entries. Now currently it is taking some rest it here. Did the story of HAL is over? Probably not, because it is taking support. It is a good sign. If it is heading like Bajaj Auto, I would be very concerned here. FinServ, again, same story like Bajaj Finance. Nothing great here. Although this move was all about the Bajaj Housing Finance IPO, but nothing happened here. DMart, look at this, guys. No matter how good the story is, price, again, I'm repeating the same things, but I want you to understand why I'm repeating the same things. There was a fantastic rally, but look at here. We have talked in the stage 3 slide, right? Usually the top is reflected by false breakouts, huge breakdown in selling, large volumes. Almost after October 2021, the price hasn't even the most recent high also, it didn't break its recent high. Still, I mean, people, we retailers get trapped here, and now we have lost 40%. And it's not about losing 40% of money. Almost in the last 3 years, you could have seen many stocks getting doubled or tripled, right? You have lost the time opportunity. That's what you should focus on as an investor. Trend. I think this is one of the biggest wealth creators, especially in large cap space. Again, 1341%. That's 14 times your money, right? Very fancy story. Very fancy story. Again, as a fundamental investor, you might have sold here, or you might have sold here because it is getting overvalued. Although this was a huge chart, but again, it is getting trying to recover back. See, that's the strength of a strong chart. Adani Green, again. I don't even want to comment on Adani stocks. Very choppy. I want to hold stocks like trend. Why would I want Adani? I want a peace of mind. I don't want Adani. Simons, again, very good chart. See, stage 2, long stage 2 uptrend. Even in this correction, the stock is flat. It is uh, trading over the same region. Once this level is taken out, again, you are good to go. JSW Steel. This is a bit different from the stage analysis. This is actually in a long-term channel. The moving average is sloping upwards, but a very slow mover, Like almost in the last 1 year, it has moved only 45. Actually, it's last 3 years, it has moved only 45%. Adani Power, again, too choppy. As I said, I don't want. Probably I might have rallied from here to here, but I want to exit from this name as soon as possible. Zomato. See, the stock got listed here, immediately saw a stage 4 huge decline. Then it formed stage 1 consolidation. Then it somewhere here the long-term moving average got broke down and it started sloping up. This is where this crucial resistance got broken, and now you see a beautiful rally. That's what you want, right? In a stock, stage 2. You always want to invest in stage 2 stocks. Nestle, again, I keep repeating. Why FMCG is getting weaker and weaker? Because most of the stocks are breaking down from their long-term moving averages. IOC, look at here. Beautiful stage 1 consolidation, nice breakout. Actually, it was up 100% in almost 100 days. But again, top selling. This was your cue to sell your stock here. You should not keep holding after this. Probably out of 10 times, maybe 2-3 times the stock might rebound. You can always enter back, right? But most of the time, 6 to 7 out of times, it would always lose you money. Look at this bell. Bharat Electronics. This is what I'm talking about. Despite the market weakness, it took support here and now again starting to move up. See, that's what I'm talking about. Very wonderful chart. Very. This is what you want to hold in your portfolio. Varun Beverage, same, just like Bharat Electronics, same story. Although these were not part of the Nifty 100 in 2019, 2020, now they have become large caps and got addition into Nifty 100. So again, I don't want to make your expectations that the top 100 companies would make something a return like 700%, 800%. This was a mid cap, small cap company slowly transitioning into a large cap company. Geo Finance, again, not so good. Look at here. There is no clear trend, right? DLF, it was a good rally. All the real estates had a very nice time from last year, May to this March. But again, now we are seeing the consolidation. Although it is hovering around this level, probably it might take some time, and maybe after few days or weeks or months it would break out. Then I would be interested. Tata Steel, again, nothing here. It was a slight breakout but quickly came back. Vedanta, again, this was a very choppy chart similar to Adani. Sharp fall, again sharp price. Cyclical stock. Metals are usually cyclical. So as long as the economy favors them, they would be in the trend and you should be very quick to exit them. Grasim, good chart, strong chart, although didn't give you much returns, but it was a very peaceful journey. Even in this correction, it didn't correct much, right? See, only 9 to 10%, whereas other stocks were correcting 30%, 40%. IRFCC, this is where the stock had initially broken out of its long-term consolidation, the stage one, and almost it made 840% return. But somewhere here it got a little bit choppy and it has corrected almost from this top to 35%, then went up again. I mean, currently, as of now, the stock is not in a very good shape. This was a very good time to hold the stock, but not currently. Again, LTM, it is slowly inching up and reaching this line, right? Once it gets breakout, probably you might see a new uptrend. That's why I'm stressing out why IT stocks are looking good. Indigo, again a beautiful chart, very strong uptrend. Look at here, it got quickly broken down, and this is what I call the strength. This was a huge gap down selling. Probably this would be the trigger to sell you, but again, you can quickly enter it back, right? Maybe you might have a transaction cost here, but better to save money rather than watch it going down each day, right? TechM, same story. The stock is almost near to its all-time high because that's why I'm drawing the line here. If you see Wipro, LTIM, they were somewhere here, but TechM is already way ahead, and HCL Tech is already way ahead than all these stocks. That's why I called HCL Tech as a market leader in IT space. SBI Life, good rally, but again, you see, sharp fall. Not something. Again, it did not make much money to investors. Pidilite, again, no matter how good the story is, the price itself tells you it has been very choppy, very choppy. Started to go up, but again, look at this. ABB, very good chart, but now it has become a bit choppier. It is trying to get back here. These were the times which were very good. Probably somewhere here it has started its rally. The stage 2 has begun somewhere here. Look at this. From here to almost here, you could have captured 600% move with simple, plain, weekend kind of investing. Divi's Lab, look at this. This was the proper stage 2, then this was the top, then this was the proper stage 4 decline. Then again, you are seeing, I will just draw lines for you to see. This is what a stage 4 looks like. Again, I don't want to complex my chart. This is what a stage 1 looks like again. Now it has broken up, it is slowly moving up. This stock is at its all-time high. Market is correcting, but this stock doesn't care. It is going higher and higher each day. That is what I call the strength, the relatively stronger names. HDFC Life. I think I don't have to explain it to you now. No money made here. As long as this doesn't break this 750, 760 level, I'm not even watching at it. Hindalco, again, cyclical stock, metals. I would ideally stay away. You can only capture the metals if your timing is right. We don't want our money to depend on the timing, right? PFC, wonderful story, very good, superb consolidation breakout. This was like a multi-year breakout. long 5-6 years consolidation, then it was up again 300%. Now currently taking its time, because when a move happens something this strong, you need a lot of absorption of this supply, then it will start moving up again. Britannia, see, this is the breakdown I am calling. All the FMCG stocks, similar story. Ambuja, again, not so great looking. Gale, it was a very good, see, this was the stage 1 consolidation, good rally, but again it has gave up now. Tata Power, see, this was a wonderful stage 2 uptrend, then it got consolidation, stage 1. I would call this again a stage 1, then a good stage. Again, now it is getting consolidated here. REC, same, just like PFC. I don't have to repeat the things. Mother's and Sumisi, this is where it has broken its all-time high somewhere here and made a good money, but immediately it got corrected in the market. BPCL, very choppy. Again, depends on the crude pricing. I don't ideally want to touch like this. Godrej Consumers, they are much more exciting stocks than this. Again, although this was the breakdown somewhere here. Eicher Motors, it has become lately a slow mover, but still holding the levels. Unlike Bajaj Auto, which has gave up long term. Even Bank of Baroda too. All the PSU banks are currently just waiting, just waiting. They are just absorbing the supply. You might need a very strong force again to go back. Cipla, decent story, but a slow mover, taking its support each time at this 200-day moving average. Good to go. Same JSW story. This was the breakout, and you are seeing good. But now let's see whether these levels, this support would be respected again or not. TVS Motor, as I've said, every time it comes here, it gets bounced back. It comes here, gets bounced back. This time too, if the stock fundamental keeps, if they keep on improving, obviously you would see a bounce back. Torrent Pharma, same. You would see here. I don't have to draw the lines now. I think you can just imagining in your mind. Strong rally, strong price action, strong recovery. Sriram Finance too. It got here sudden. So usually as a long-term investor, if you are very confident about businesses, these technical charts gives you opportunities to add here. See, this was the bounce. See, this was the bounce. But again, if it comes down, right, you have to sell it. That's where you have to protect your money, right? Save money through, just like Warren Buffett has told, two rules. Cholamandalam, not so, not so. Bajaj holding, inching up, respecting this. Okay, decent of all the Bajaj stocks. Look at this one. Look at this one. Why? 200 to 4,000. Again, 4,000. 80%, 83% correction. 83% correction. I mean, you have lost everything in this stock. PNB, again, it was a very good story, but this was somewhere your exit call. Again, it is now trying, probably this moving average would also, as of now, it has acted support, right? Now it starts acting like a resistance. If this gets broken out, then that's a good sign. Dr. Reddy's, it has gave up. See, all other stocks are rebounding back, but this one is not so. Although you have another support here, let's see in the next coming weeks. United Spirits, good stock, currently in a stage 2 uptrend. You see that you are expecting a strong recovery here. Loda, again, you need some time to absorb this rally. Let's wait. iPro, not so great. The insurance stocks haven't been a good stocks over the last few years. Havels too had a decent rally in this last 6 to 8 months, but it has become again choppier. Bosch, again, one good setup, nice move uptrend. It is still strong. The trend is intact. The slope is still moving up, probably taking its time. Apollo Hospital, again, same kind of story, but a bit slower. The trend is a bit slower. Zydus Life, look at here. See, this is what your exit looks like. It was in the long consolidation, then got broke up. Then this was your stage 3 top, looks like massive selling. Hero Motocorp, again, same, it got broke down here, so not so good right now. Naukari, this is what I'm talking. After HCL Tech, I love Naukari too. Probably I love Naukari more than HCL. They are almost clashing with each other. They are making new highs in the IT space. That's why. See, strong chart. Tata Consumer. This was your exit call. This huge support level has broken down. You will just keep losing money, or you will be just wasting your time, especially time here. Dabur. See again. That's what I keep stressing about. Why do you need to have charts? Why do you need to know stage analysis? This will save you a lot of time. This will save you a lot of money. ICICI Lombard again, same. Let's wait whether it would bounce back in future days or not. Zindal Steel, okay, but again, it is taking support but slowly heading down. Let's see what happens. Sri Cement, see, I don't want to waste my time. I don't want to waste my energy here. Just garbage. Canara Bank again, very good, but this was your call to exit. Let's see how it pans out in future. Union Bank, same again. This 130 level was the crucial support. Once it got broken down, it tried multiple times, but always keep getting rejected here. IndusInd Bank, see, this is the stock you want to avoid ideally. I mean, you lost 40%. The entire market has doubled in the last 5 years, but you lost 40% in this stock. That's why charts help you. Charts help you. Again, I don't even want to comment on this chart, although it looks beautiful till this here part. But you see, right, within hardly it took a matter of 30 days, 80% down. NHPC, wonderful story, but this was your exit. See, you have to be very, I mean, my eyes are trained. That's why I started this 100-day price action challenge. If you keep watching the same stocks over and over and over again, you can simply identify what's going wrong in the stock. That's why I'm stressing out. Try to learn the charts. Follow the 100-day price action challenge. I bet that after the 100 days, you will be very quicker in identifying the exits. BHL again, see, but again, this is trying to get back at least a little better. Almost NHPC and BHL, see, looks the same, right? Almost like a mirror images. IRCTC, I think we have reached the end again. Same like DMart, if you see, wonderful. It was up almost 300% in 300 days. But again, stage 3. This was your stage 3 top. Same time, 11th October 2021. Same time. Same like DMart. It tried to move here, but no. Same, almost DMart and this looks same. I think we have reached the end of the price action analysis. From next week onwards, we will do the similar exercise. We would do 100 charts using weekly time frame. We would see the long term uptrends. I would start with the sectorial analysis in the next week, and we would see each chart how it is developing. I hope that you learned something new today. And if you like this video, please subscribe to my channel, The Chart Shastra. If you have any comments or if you have any suggestions, please put in the comment section. Thanks a lot, guys. Kindly subscribe to my channel and watch the 100-day price action challenge. See you. Have a great weekend.